Hello, small business owner. It's the end of the month, and in preparation for paying your bills for the following month, you send out invoices to your clients, right? Your favorite client who has the biggest balance says they need a little more time to pay the invoice in full. You say, okay, no problem, knowing they'll pay it. But now you get a little nervous because how are you supposed to pay on your own auto loan and mortgage? Being a small business owner, this is a risk you take, which is why it's important to have other sources of income to back you up when situations like this arise. You consider getting a loan, but what are you going to do if this happens again? Take out a loan each time? So you think about pulling from your savings, but you know better than to getting into a habit of doing that. So what do? In this case, getting a personal line of credit may be just the thing you need to give you access to cash for short-term borrowing needs. You may be asking yourself, okay, what is a personal line of credit? Well, a personal line of credit is an account which allows you to borrow money when you need it. So how does it work? Think of it as a revolving account. When you apply, you'll be approved for a certain amount, which varies based on your credit history and current score. Here's where the revolving part comes into play. As you pay back the balance, you can pull money from the line of credit again and use it for another instance. In this case, when you have a client who's going to be a little late on their payment. Who else can benefit from having access to a personal line of credit? Turns out a lot of people. For example, do you have a commission-based position? South Florida is a sales-driven area, and a lot of jobs here consist of commission-based salaries. However, sometimes commission can be a bit inconsistent, which can have an effect on you paying your bills. Having access to a personal line of credit can help fill in the gaps of your salary until your busy season picks back up. What happens when it's tax season and you're stuck having to pay? Well, a personal line of credit may be something you want to consider to get that debt paid quickly. So when should you back off? Having a personal line of credit is there to help you when you're in a crunch. It's not supposed to be something you solely rely on. It's important to know when you should stick with it and when it's time to look at other options, like a personal loan or a home equity loan. Loans are typically used for larger amounts, whereas a personal line of credit is intended for emergencies and should only be used for smaller amounts that you know that you can pay off. For instance, your washing machine broke and you need a new one ASAP. With a line of credit, you can just transfer funds to and from your checking account and get back to your laundry in no time. But if you're planning on buying all new furniture for your home, this is when you might want to consider a loan instead of a line of credit, as the cost can begin to get into the thousands. Be comfortable with your decision before you apply and know what all your options are beforehand. If you're ready for your personal line of credit, head over to tropicalfcu.com and go to our borrow page. From there, you'll be able to apply for your personal line of credit in no time.